Well, I told you. I tried to tell you. Last video, we were right here, and I said, don't freak out. This is a buying opportunity. You're going to regret it if you don't take advantage, because these are the kinds of opportunities that the market gives you that you have to take advantage of, because if you don't, you're going to miss out. This is why technicals are so important. It's because when you understand the fundamentals of whatever sector or equity you're investing in, and you know that it's bullish or bearish for that matter, or whatever the case is, when you understand the fundamentals, the technicals give you the guide on where to buy and what to do and what's actually going on in the market and how to play it. So that's cool. What happens next? Well, here's the deal. If you remember some of my earlier videos, I was trying to tell you guys down here when Sprott was still around $11, like, look, the uranium sector is trading with the broad indices, right? So the NASDAQ, the S&P, the Dow. Anytime that the indices would sell off, the uranium equities as a sector would also sell off, okay? They were trading in confluence. And I tried to tell you that, look, these things are going to diverge, right? Uranium's going to break away from the rest of the market, and it's going to have its own bull market. And that's part of why it's so attractive, because you don't have to be afraid. You don't have to be scared of the downfall of the rest of the market. And that's exactly what's happened. This divergence has happened, but there is a new pattern taking shape right now. And that is the confluence of commodities broadly trading together. So uranium and gold and silver and agriculture and oil, these things are starting to move in sync of each other. And I think what this is telling us is that the broad commodity super cycle is beginning to take shape as kind of its own indice, if you will. Okay, these things are about to blast off, and the reason why we know that is because if you look at the way they're trading, they're all setting up the same way. What do I mean by that? I'll show you. So first of all, staying here on Sprott, you can see kind of a cup forming of a potential cup and handle, and this sell-off is most likely going to turn into some kind of consolidation. Okay, because let's say this is a cup and we're about to start forming the handle, then you can expect one of these handle formations to happen, right? So you might get something like this. We might get a flag that way. We might get some kind of ascending wedge that way, right? We might just get a good old pennant that way. I mean, there's lots of ways that this handle can develop itself. I would expect that we would likely stay above the 50. I think any touch of the 50 is probably going to be a very, 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 very strong buy. All right, so you're probably looking at something like that as the lower bounds, and however the top forms, whatever it does, kind of looking like that. So you have probably a little bit of time. I don't know that this blasts straight on through. It very well could. I mean, there's a lot of news. There's a lot of chatter right now about these sanctions on Russia. Who knows what a day may bring? But any kind of sell-off, you have to trust me. Just like I told you would happen on this one. I told you right here, right? The market was already closed. I told you what would happen. And look at what we got. So you come back in here and you test again. You add to your position. You don't think twice about it, all right? This could not be more fundamentally bullish. Therefore, we use the technicals to decide when to buy. We knew it here too. Uranium fuels bounced right on the 50. You know, it got a smidge under 8. Remember, we were talking about getting under 8 being a good entry and under 7 being an amazing entry. Well, there you go. We dipped barely under 8 and took off. We have climbed 21% since then, just that fast. And that's just how volatile and fast-acting the uranium space is. You have to be very decisive in this space. You're going to get killed. That's why for most people, it's better to just find the good entry point, find a good entry price, and just let it ride, because the market has a lot higher to go, and your odds of success are 100%, assuming you don't just keep clicking. You know, you ain't got to keep clicking and trading all the time. You know, just let the equity work for you. Let the market be bullish. You know, think about Bitcoin. If you could go back in time and put $1,000 on Bitcoin at $1, would you do it? Yeah. And what would you do? You just leave it alone. Right? You would just leave it alone because you knew where it's going to go. Okay, so why can't you do that with this? Just buy it and leave it alone, right? Because it's going up. We're still undervalued. The sky's the limit on this stuff, so just buy it and leave it alone. You're not smarter than the market, right? But you can be smart enough to recognize a bull trend and get in on it, because it's still early. Okay, It's still early. I guarantee your neighbor isn't talking about this stuff yet. All right. So have faith. Just chill out and don't overtrade. All right. This is an investment. Just to check in on LEU, not a surprise here. We did get that rally from, I didn't even talk about this price, and you'll notice I don't change my charts, okay? We got this bounce right on the tick. It tells you I'm getting the right numbers, right? And where do we come to this upper trend line? And we turned around. So yeah, I'm not surprised to see this. This was a good swing trade. If you made it, if you did buy here, you know, I'd be selling, just taking the profit, because if these sanctions come, we're going to sanction enriched uranium. There's really no reason for this to go up. It'll probably sell off again. Down here is probably going to end up being a good target, because some kind of news, I imagine, will come out after the sanctions of how we're going to shore up supply, and it'll all be okay. And who knows? I mean, but right now, this thing is kind of risky. Nobody loves Centrus Energy more than me. But even I had to sell out because it just doesn't make any sense to hold right now. And you got to understand, if this company ends up working out, we're going to find out. The market's going to let us know. You know, there's going to be news from the Department of Energy. They're going to get the contract. They're going to let us know they got supply. That information is going to come. You don't have to be at the bottom. Okay, just wait for the signal to come and get in. Because once that day comes, once you get the confirmation that everything is good, I mean, they're going to skyrocket. It's going to be up here. Right, so you don't need to be in right here. It's okay to get in right here if it's going up here, you know? I mean, people try too hard to get the very bottom. And getting in within 5% of the bottom is easy to do when you're charting, okay? But you don't need to be on something that's not a guarantee, okay? There are too many other guarantees, like NextGen, like Energy Fuels, like Cameco, okay? There are so many good companies you could be looking at that there's no reason to take this huge risk on a massive sell-off on something that was once very bullish and is now pretty skeptical. One of my favorite plays has been Western Uranium. I don't think I've talked about it yet, but it's one of my larger positions, actually. And I actually added at $1.20. So I didn't get the low because I didn't have the cash right there to buy it, but I bought as soon as I got a chance, and we're moving up quickly. And this company is sitting on a lot of uranium. They're very undervalued. Their market cap is $78 million. I mean, they're sitting on billions of dollars worth of uranium. This company could potentially get bought out by an Energy Fuels type company, certainly a Western company. So it's certainly something you should own already. If you don't, please put this on your radar and buy. You'll notice the 50 and the 200 crossing. We're probably about to get a golden cross here. I mean, just go to it and hold it, because we got a long way to go on this one too. I told you so. I told you so. I told you so. I keep saying it, guys. I called the flush down, and I called where it turned around. I mean, it was easy peasy. And we gapped open, by the way, and the gap closed the gap. It's interesting to see. But anyway, what happens next? Right? That's the next thing. Well, I think, like I was telling you in the setup to the episode, commodities are starting to trade with each other in kind of this grand super cycle. All right, they've diverged from the broad market, and they're kind of converging on their own commodity space based trading range, right? Their own synchronicity. And this is so bullish to start seeing this, guys, because they're all fundamentally bullish, right? Most of these things are still undervalued, especially when you consider what's happening to fiat currency and how it's about to just get blown out. I mean, look, this is setting up to be massive. I mean, look at the gold chart. You should know this already. It's a cup and handle, okay, well over a decade old. I mean, this is a massive pattern. And then the handle is its own cup making another handle. It's like the inception of charts here. It's crazy. It's cup and handle within cup and handle, and knowing that, we can anticipate what it's going to do over here, okay? So just like we looked at in uranium, we'll probably see the same thing over here, where we'll put in some kind of another pennant, right? So we'll probably get some kind of action like this or like this, right? I mean, any kind of technical handle pattern is possible, like this, right? These are all possible, okay? So buy on weakness. If you missed it, wait. You'll probably get another chance for it to roll over, I'm sure. It's not going to just skyrocket up yet. It will probably do a little consolidation for a minute. It would be nice if it consolidates like that. That'd be great. But we'll see what it does. We know it will. We'll just see how and what shape takes place. But that's the kind of thing you can foresee happening and predict, and just get ready for that, okay? Because this stuff is setting up for a breakout that's never coming back. You understand? So if you don't have any exposure at all, you need to get in, because you don't know what a day may bring. The world is crazy right now. The only thing we know for sure is that this is going up. It's going up a lot higher than it is right now. Okay, and we can try to anticipate 1 or 2 more buying opportunities for, a few dollars less than what we've got. And you just got to get in. If you don't have any exposure, you don't have to go all in, but certainly you need to get in and get your feet wet. And of course, we are talking about both physical gold and all of the equities. Look, just take a second and look at the yield curve. We are flattening. This was entirely predictable. And you know what else is predictable? Inverting. And you know what else is predictable after that? What happens next? Okay, we're about to have a sovereign debt crisis, a fiat currency crisis. We are about to go through an economic turmoil that many generations have never even seen. Okay, and we're all going to live through this stuff. And this is not doom porn. This is being intelligent enough to recognize the situation, identify what's likely to happen. Historically, we have precedent for everything we're going through. I mean, this is not just invented out of imagination. Most of this is mathematics, okay? The math is telling you what's going to happen, and we're coming into crisis. And so what do? Do you get scared and roll over and cry? No, you prepare. And one of the ways you can prepare is financially, and there are certain kinds of investments you can make to prepare for this. And what kind of investments are they? Well, it's the ones we're looking at. It's commodities. It's things that come out of the ground. It's things that are real. Okay, it's things that the world needs that it's in short supply of. Okay, and so we can prepare for this and have an educated guess on how to appropriate our funds and our resources, not only to benefit, but to survive and potentially even prosper. And look, guys, I'm not talking out of the side of my butt. I'm showing you actually a snippet of one of my accounts on Fidelity today from my gains and losses just on today. And the reason I'm doing this, and I actually hesitated on doing this, but I just wanted to show you that I have skin in the game, okay? And that I mean all the things I'm talking about. I'm committing to the trades that I'm talking about right here on this channel. And this account is 100% commodities, pretty much. I mean, it's gold and silver and nickel and oil and copper. And, magnesium and lithium. It's uranium, all these things that I talk about on here. This is what it looks like, and this is what at the end of the day looked like, up 5% on the day. And this is part of the reason I'm showing you this is because it shows the confluence of commodities in sync with each other. Because my account, this particular account, is really its own commodity ETF, and it's showing you the confluence of these things working together, trading together, and being bullish together. And that's, this is not to be ignored. These are major signals that this thing is about to explode. You've got to get some exposure to commodities, you guys, because the world is not going to wait for you to educate yourself. The world is happening in real time, and you have to prepare, and there are lots of ways to prepare, and this is just one of them. But, we're all in this thing together, so to say, and I'm just trying to do my part to help out. Take it or leave it, this is what I got to say. And look what's happening in agriculture. Just like I said, we're selling off. If you can find a place to buy, if you can find a sell-off, take it. We got almost to the 50 here in IPI, and we got a nice reversal, up 15% in the day. All right, LXU up big. I think this is the one I was actually talking about, and I put it right here. So look, guys, I'm just telling you, this stuff is all very bullish. I actually found another one. This is a smaller company, Arianne Phosphate. I would encourage you to do your own research on this. I was actually led to this and discovered this watching another video. I was watching Jordan Royburn on the Daily Gold. Okay, and he had a guest on that talked about this company as a potential tin bagger. And you hear a lot of people talking crap like that. But I went and searched it up and started doing some digging, and I actually think that this is probably pretty legit. because their resource is extremely pure. It's very large, and this is going to be very meaningful, not just for fertilizer companies, but for EV and the creation of batteries too. Because the thing about it is, it turns out that a lot of phosphate that comes out of the ground when it's mined has a lot of byproduct in it and a lot of junk, and this has to get extracted out. But the thing about this company is they actually found a pretty pure resource, and that's going to potentially turn into some big bucks for these companies that really need it to be as pure as possible. So this is a speculation that I'm going to add in here and start talking about. I do have a buy in. We'll see if it hits. I'm not trying to buy it today. There's no need to FOMO into this thing. I mean, you want to see if you can get a good price. I mean, look how many times it's touched in the past. I mean, why can't it touch again? Maybe we can at least buy it on the 200, right? So we'll just watch it and try to do that. But I'm definitely going to put some money into this. It did seem legitimate to me. I would encourage you to go look it up also. And this one right here, this is the big one for me today, guys. God, can you believe it? We talked about it right here on the last episode, right? And we said, man, if this can fall down to $39, that's a buy, because at minimum, it's a swing trade. And at best, it might be a great investment opportunity, right? And sure enough, it got an enormous bounce. I mean, it's all-time record volume, not even close, by a mile. Huge, huge. What did it do? Went up 24%. Just a massive, massive turnaround on massive volume. So my target ended up being too low, but man, we sure got it right. We knew that that would be a big bounce. We'll see what it does. It's not over. It could very well still come down here. But that bounce sure was strong, and I was waiting on it, but we just had the price a little too low. But again, we'll keep an eye on it because long term, it probably is good, and it might still roll over. So we'll keep an eye on it. But man, everybody who got in here, good job, because that was a good trade. Another potential cup and handle for you. We talked about this before. My favorite nickel company, FPX Nickel. Man, it just looks good. Coming down, touching the 50, bouncing, putting in the same pattern that Sprott and gold and all these other commodities are. Just getting ready to come up here and blast off. You know, this company is sitting on, what is that, 1.5, maybe even 3 billion now with the prices of nickel that have gone up so much. But this is massive upside, 10x minimum. It's a great speculation play. I don't even know if it's really a speculation. I mean, unless something goes seriously wrong, this company is going to go a lot higher over time as they get closer and closer to production. So just charting this, I mean, if you can touch on this 50, keep track of it. That'd be a good spot to buy. You touch that 200, definitely buying hard. And just to say I told you so again, just to say, look at steel. United States Steel Corporation broke out, retested, and there she goes. I mean, it doesn't really have a whole lot of reason to come down. We're going to keep watching it, but good on everybody who bought the retest because it's probably going to work out for a long time. My first entry into this company was down here. I bought it $777. Remember it vividly. I bought it right over here, and I had to live through this a couple of times before we went up. But steel was an easy call back here. Very, very easy call. And it still is. I mean, you want to see more volume, actually. That's not the kind of volume we want to see, so we'll keep an eye on that. Declining volume on rising prices. So maybe we will get one more retest here. All right? So keep an eye on that. If you haven't made a position yet, probably don't. Let's see how this volume and price react to each other and if we can roll over.